Good morning from Dubai. Today we are talking about the trillion-dollar problem of the Fed and the recession, because I think they have one very big problem to solve. Should they cut rates or not? And with all the turmoil that is going around with trade war and the recession discussions, it's a very, very big and responsible job. So let's dive into it. Okay, so for those who don't know, the Federal Bank of US, they have the responsibility of creating the interest rates for the bank to loan money, and therefore also steering how much money costs into the market. This is a very, very responsible thing because, if the rate's going down, the money is going cheap, and the money is pouring into economy, which supports loans of companies, money floating into the market, investments are being made, and so on. So you can see that how important this is for the economy, especially in ways of the downturn. But currently they are in a kind of misery, because the signs of a recession, like the inverted yield curve, as well as the trade war, all these bad signs force the Fed to cut the rates. But this is the only and most important instrument to steer the economy. So if it will not be the situation where the economy will go into a recession, they are shooting out their possibilities and instruments to create and support the economy. So when they are doing that and the economy will go stay stable or will go good, they will have the issue that they will not have any more rates to cut. So apparently there's currently a lot of negative news. Also I just read that there's 90% of a chance that the Fed needs to cut the rates in September, when there's another meeting by the Fed, and 0.25% will be cut by then, and it's expected that there will be another cut by the same amount, quarter percentage points for the end of the year or towards the end of the year. So we are very curious how they will really decide, which will be known in the next couple of weeks. The issue is that the trade war is definitely hurting the economy. Just now this Friday, Trump announced or went into a Twitter fight that he wants and he orders US companies to go out of China and go back to US to produce products, and that he increases also just this Saturday more tariffs on Chinese goods. This will definitely will not help the market on Monday to be up, and I think there's another weight downturn and dip to come. So for those who are staying in the market, of course, it's another opportunity to buy cheap sale stocks. And for those who are a little bit afraid, they maybe panic and go out of the market. However, you see that this comes in addition to the decision for the Fed if there should be a rate cut or not, and this is something that the economy suffers, obviously. In addition to that, even it's really the case that the Fed has many offices. They have the New York Fed, they have the other states Feds, and it's apparently that the Fed is within its structure also not very union in its opinion about the economy. So this is not helping. Moreover, the Fed to make a decision that everybody agrees on. And Jerome Powell also gets very, very smashed by by Donald Trump. I think in the history there was not the case that a US president was smashing and against the Fed chairman that much like Donald Trump is against Jerome Powell. So all of this comes on top of the shoulders of Jerome Powell to decide on the rates. So you see, it's not that most easiest job nowadays. So make sure to follow this closely, because it's very important how this will continue. We have since years now, since the economic crisis 2008 and 2009, the longest bull period through cheap money on the market. So the ECB in Europe, they are pumping money and cheap money into the economy. We have the Fed that cutting rates, and the money is really cheap. So you see, all the money have to go somewhere. So even it's going into bonds, the bonds from governments going into the negative, which means actually you give the money as a loan to the governments, and they are paying you back after 30 years, and you get less money that you paid for. So you see how much fear is also in the market. This usually develops when there's uncertainty in the market, because if the people putting it in stocks can obviously go very, very down in price in case of a crash or a sell-off. So you see how desperate the money is, that they are going into negative bonds to lend to countries, and this is very something that was never there before. So this comes on top of that. So the current economic situation, or the macroeconomics, is very interesting, and that's why I believe the Fed is really in an interesting position to make the next step. And let's see what does it mean. So recent statement by the Fed, and also the chairman of the vice chairman of the Fed, are those that they saying that since July, so last month, the economy is definitely, the world economy, international worldwide economy, is slowing down indeed, but they don't see a big risk of a recession, which is good. If governmental entities are sticking to a statement, and you see that not only in the Fed but also to other officials of the market like Mnuchin and Donald Trump, all are maintaining the same statement that there's no recession in the nearest period. Though of course they are fighting this inflationary environment, which means that if people don't spend money because there is a slow down coming for the economy, then the inflation of the money isn't there, and this means also there's no much spending. If there's not much spending, there's no much investment, so the economy cannot grow further. And this is actually the actionable task of the Fed to with the right policy that they are trying to figure out months after months. So every month they are looking into different economic statements and measurements and data, and then predict and want to predict the economy, which is almost impossible. However, they are trying their best to make and adjust their policies to a proper way to make sure that they keep this bull market and this good economy run since 2009 up, because when there's a recession coming, then all the other things like national debt and all the other things that and bubbles that we have can burst, and this can in the end, as a final and worst case scenario, come to a next crisis whatsoever the bubble will be. Also property prices went crazy since the last financial crisis as well. So a lot of things that can pop up if the Fed is will not do the right thing, and that's why I believe it's so close to watch what they are doing, and it seems they are still continuing to slowly but surely cut the rates, which bring cheaper money to the market, which brings government and funds and everything to invest into commodities on the market like bonds, stocks, and so on. So it's gonna to be believed that the economy will move on, maybe a little bit slower, but in the same direction, and this is up towards the next couple of months. So that's why, if you're looking the other videos that I made just recently, I believe that the recession 2020 maybe is not coming, but nobody can say that, and nobody can expect that, and nobody can forecast that. Of course, even the most best paid people on the Wall Street cannot predict when a recession or a market sell-off or a crash can come. So make sure to keep on watching. Thank you very much for tuning in today. Today's was more into macroeconomics topics. If you are looking into breaking news about stocks, market, entrepreneurship, business, money, make sure to subscribe, and I see you tomorrow because I'm vlogging almost every day. The days that I cannot vlog, I'm traveling or what so forth. So thank you very much for watching from Dubai. I will jump now into the pool, and make sure to also to check out my Instagram, which I will put here, because if you're waiting from vlog to vlog, you also can see what I'm doing behind the scenes. Quite interesting. Follow my stories and the post of there. I'm posting there also Instagram TV to make sure the content that I'm doing, and that it help you to invest in the end, is spread over as much platforms and can reach as much people as possible. So thank you very much for watching. Make sure to stay tuned. Thank you very much. Bye.